Tesla as a business is actually in multiple market segments, each of which are experiencing exponential growth S-curves. Today, we'll not only look at how the electric vehicle market is forecasted to grow, where all countries are eventually headed to the 92% market share that Norway has, but Tesla's growth in full self-driving, energy, and robotics AI, each also going to experience S-curves. Actually though, what many don't understand, and if you're a Tesla investor, you really should study this, is that Tesla's main advantage is that their manufacturing capabilities are now at the point where we will see rapid acceleration of their AI and energy sectors. The more cars you make at scale and at speed, the more data you get for AI and autonomy. The more cars you make at scale and at speed accelerates your dominance in energy. We're now at that inflection point. So today I've got Brian White joining us. Brian has his own YouTube channel called FutureAza. Thank you so much, Brian.
Great to be here. I got a preview of your show, and this is a good one. I'm excited.
Yeah, this is exponential curves. You've been following electric vehicle. We'll walk through those charts and data on EV exponential curve. And then, the beautiful part of this segment also, we'll talk about how Tesla's manufacturing is going to accelerate the S-curves for AI and energy. I think that that's a pretty interesting comment there. So this is a graph created by a guy named Jason Chang many years ago. So it's old, okay? This is 2020 that he did this, but it still holds today when you look at the S-curves that Tesla has. And each of the S-curves kind of are showing you the relative TAM, the total addressable market, right? See, original Roadster, Tesla got through that, the Model S and X, then they did the Model 3 and Y. And this is where we're at right now, right? Model 3 and Y, it's accelerating, and we'll show you whether or not electric vehicles is still in this S-curve growth, or as some people have been saying, it's slowed down. But once we get to full self-driving, that's how much bigger the S-curves are. Cybertruck and Semi, we're just at the beginning of that, we've been reporting the last few days. Tesla Energy and the lower priced autonomous vehicles. And the other way to look at it is this table or chart that Dave Lee had created a long time ago. EVs is a massive market, but it's only small compared to FSD and robotaxi and energy and AI robotics. And we're really in 4 S-curves, massive S-curves that Tesla represents. I'll pause there before I show more data.
Yeah. Well, so go back to the previous slide. I think I love it. It is on this one. I think the 3 and Y is leveling off, but I think it leveled off a lot higher than this chart assumed that it would. I don't know if if Jason was assuming that the Model Y would become the best selling model in the world of all vehicles. I think that was a little unexpected. And while we can argue that some parts of this may be a little bit off, and on the next slide you were showing energy looks so much bigger than EVs, and we can argue that, but that's not the point. The point is that these are huge addressable markets, and for everything apart from EVs, we're just getting started. So there's a lot of room to grow, a lot of markets that are as yet largely untapped by Tesla.
Absolutely. So this is a great study done by Clean Technica, our analysis. They did this 3 months ago, and they titled it Estimating the Growth of Electric Vehicles and Tesla Sales, an Exploration of the S-Curves. Okay, so do we think that we're actually in this S-curve of the forecast for electric vehicle sales? This is global by country and region. You got China, Europe, US, and then the global sales, right? So China is in the blue, Europe is in yellow, US is in red, and the green is if you add them all up in the global sales, okay? So from 2015 to forecast to 2040, this is what experts are predicting. And if you follow where China is, they're at 40% of electric sales. Market share of new vehicles is actually electric vehicles. And if it's actually new electric vehicles, including hybrids, you're at 50% already. You can see that it is following its S-curve. Europe looks like it's possibly still in that path. And then here's, slow growth US sales here. This is the market share globally. So what happens when it's quarterly? If you look at quarterly Tesla sales by up to 2024, again, it's 3 months, this show. So it's pretty accurate, pretty close. You can see the sales of Tesla's quarterly sales. And boy, you can tell me, but it sure looks like that it's still an S-curve despite this supposed slowdown. And if you put a log scale, just to have an easier look at this, you can see that it absolutely is following along in this nice logarithmic scale. There's a slowdown here for sure, but it's again nothing to get worried about. If you look at Norway, and they're at 92% of all new sales is now electric vehicle. They certainly followed that S curve. The question is, do you think that the other countries will follow that as well? And here's a way to look at this. If Tesla's sales, here are 2024, by 2030, what could happen? Well, this is based on probabilities of final share. So the red is if Tesla's had 20% final share or they have 5% final share. At 20% of final share at 2029, December 30th, you will have 2.25 million sales, quarterly sales per quarter. So that's close to 10 million sales per quarter. That's what they're projecting if it follows along this S curve. What's your thoughts about all these graphs here?
So on this last one, I would say that highest figure is starting to look unlikely because we haven't seen announcements of new factories. You have to build them first, and then you have to ramp them. I don't think demand would be the issue. It's clear that Tesla is not willing to build factories in an uncertain era of, trying to guess what demand is going to be. They need the demand to be evident. And I think on 1010 we'll get a better idea of how evident that demand is, because right now we can't see beyond that horizon. I've had a lot of questions lately. Why isn't there a factory in India? Why hasn't Mexico broken ground? Why aren't we seeing expansion in Berlin and Shanghai? And the answer appears to be there's a pivot coming and we can't see it yet. And that everything will make sense very soon, but today is not that day. So these S curves, your bigger question was, will these S curves hold in various markets? And a lot of the answer comes down to political will. In Norway, they said, we want everyone electrified and we're going to create incentives to make it happen. In China, they did the same. They said, we will electrify. We are cleaning up our air. This is happening. Get on board or get off the road. A lot of countries are not taking that approach. European manufacturers are trying to convince legislators or lawmakers to roll back some of those hardline initiatives. Well, we can't possibly be electric by 2035. Guys, you've had 10 years of heads up on this. You knew it was coming. I don't know why you're acting surprised all of a sudden. So there's a lot of room to figure out. There's a lot of wiggle room depending on which country we're talking about. Some countries are more aggressive than others, and some can afford to be more aggressive than others. And at some point, you'll reach a tipping point where the gas cars just no longer make sense at the scales at which they're being sold. Just how we enjoy economies of scale as a new EV starts to ramp up. Those internal combustion cars have the opposite. They get into a vicious cycle where their parts start becoming more expensive, and what little perceived advantage they have begins to evaporate.
Okay, I love the thinking there, right? Depends on political will. We're kind of late at this point at 2024. We haven't seen the factories being built by Tesla, Giga Mexico, Giga India. We were expecting that. But the slowdown of why Tesla decided not to invest heavily was obviously the economy, but also the kind of movement of the progress of robotaxi. They did announce a new affordable models, 2 of them, and then you have the robotaxi. So in my mind, it's like, okay, maybe we won't hit the 2029, but there's 2 things going on, right? One is maybe we don't need to have 20 million cars per year anymore when you have autonomy. Remember that every robotaxi is equivalent to 5. I mean, that's just a rough,
I would say 5 is fair. Yeah.
Yeah. For every robotaxi, there's 5 EVs you can take off the road. So you don't need 20 million. 20 million would be 5 million. And we can easily get there of robotaxis once Tesla decides to do it. And the reason I think that they've decided to not invest in Mexico is because they've saved that money for data centers. They built these massive data centers. Cortex, they call it, in Giga Texas, and then XAI called it Colossus, separate company. But Cortex is what they did. So I still believe that the market share is going to grow, but it will be changed significantly. Just this percentage in numbers will make me drop. Maybe not Maybe not by 2030 though. But okay, so let's look at this. Antonio Linares, this guy, I don't know who he is, but he had a great analysis on X. And he explained this that Tesla's approaching a major inflection point that will dwarf previous ones. So he explains, I really like his thinking here. So I'll walk you through what he's saying. But Tesla's manufacturing capabilities, it has significantly improved over the past year, enabling rapid acceleration in AI energy. So as manufacturing capabilities grow, that's actually going to increase the S curves of energy and AI and maybe other things too. These three pillars all form a platform that drives global material abundance. So, okay, let's break it down. At its core, Tesla is about optimizing unit economics. Despite cutting car prices, Tesla's, is now still has margin and has rising free cash flow. And they've shown their ability to build at scale manufacturing, and they continue to do that. And they're about to just, with Unboxed, even have another kind of leap. So if you can have this manufacturing expertise as you build more cars at scale, it's going to impact your renewable energy and AI. The better it becomes in manufacturing, the more efficiently it can produce new battery packs and solar panels. The better it becomes in manufacturing, the more cars it can put on the road, more data collection for training full self-driving. So these two key metrics are the inflection points, right? Total miles driven with FSD. You can't get there until you have more miles driven, more cars on the road, solar storage deployed. So the volume increase, the intelligent AI growth non-linear. So here's Elon comment on the Q2 earnings call, and I'll let Lemon go ahead and play that.
And there are times where we see basically in a neural net, basically it's sort of at 1 million training examples, it barely works. At 2 million, it slightly works. At 3 million, it's like, wow, okay, we're seeing something. But then you get to like 10 million training examples. It's like, it becomes incredible. There's just no substitute for a massive amount of data. And obviously Tesla has more vehicles on the road.
Yeah, what do you think about that thinking here?
I think Adrian Dittman's right. I think that's who that was. I can never remember. No, I joke. It's crazy when you think about it that 1 million examples is 1 million examples of anything seems like a lot. But if that's the number you need, all you need to get through it is to acquire 1 million examples and to be able to process them. We've talked about this before. There is no one on the planet with a greater capacity to gather driving data. You could set cameras at every busy intersection and get a bunch of noise. But what you wouldn't get is the actual feedback from the actual human controlling the machine. That's training the machine. And then even if you had all that data, if you and I had that data, what would we do with it? We don't have the ability to process it. We don't have the ability to label it, to get it, to do anything with it. And then you look at the first principles approach. And this is something you touched on a minute ago with the first post in this series of posts, which is that Tesla's manufacturing can help their AI. Well, how? That doesn't make sense, doesn't it? It's the same principles across the entire company. Sometimes it's the best blank is no blank, but other times it's, wait, why are we using HTTP? Wouldn't it make more sense for what we're doing to invent our own transfer protocol? What do you I guess the answer is yeah. They invented their own transfer protocol because they need to move specific types of data and a lot of it all the time. So they're reinventing all the wheels, and that gives them a unique advantage. So they've got a lot of compute, and it appears that they know how to actually make use of it.
Yeah, so again, you're balancing out having to get more cars on the road, but at the same time, robotaxi is near. And in order to get robotaxi, you need more cars on the road, but then you need the data compute to ingest all that. And so you're balancing between, do I build factories or do I build data centers? And right now, this year, it's data centers. And I think next year, you're going to start hearing more factories. You're going to see robotaxi factories. You're going to see the more affordable models. And then with the Unboxed, you don't need more factories. Brian, can you talk a little bit about that? Because the Unboxed can go vertical, can have less space for more, right?
Yes. So I've asked production engineers to try and help me come up with a good analogy. I say it's no longer a line per se. They go, no. And I go, is it an octopus? What is it? Is it a hub and spoke? And they're like, well, you're getting closer, but if it was in more dimensions. So the idea is with an assembly line, you've got little pieces that come onto the line. We're going to need this, all these pieces in this order, get them going. But of course, there's always going to be a delay where, oops, we ran short on part number 36. We need to just hang on real quick. The whole line grinds to a halt. It's unfortunate. What they do with Unboxed is they've got basically, imagine 5 little separate factories doing 5 separate things, and all the pieces come together at the end. That allows for a lot more flexibility, but more than that, it allows for predictability. You will know well in advance if you're out of parts. So all the sub-assemblies going together in big chunks in ways that other manufacturers previously found impossible due to technical constraints. They've found technologies that will allow them to circumvent it, things like steer-by-wire, things like potentially brake-by-wire. And of course, the gigacastings and structural battery are also integral to that. So that means in theory, and I would be surprised if it's not in practice, they can build a car faster on a shorter line more quickly. So, I mean, I guess I said quicker twice, but it is twice as quick. So that means a smaller factory can output the same kind of content.
And so that's why it may not be necessarily to keep, move to Unboxed. And these 2 new affordable vehicles are going to be parts of Unboxed, not boxed, still the same production line, but parts of it. So he continues saying that Tesla's manufacturing processes continue to improve. Its AI and energy divisions will grow exponentially in the future. In the coming years, we may see Tesla powering autonomous robots that generate and manage their own energy. This will serve as a new foundational platform for the global economy. Just as the internet made information transfer fast and cheap, Tesla's manufacturing, AI, and renewable energy will elevate the world to a new era of material abundance by automating labor. So it seems to be that it's all coming together now. But I like the thinking, which is manufacturing more cars, more batteries. The skill of manufacturing can create the atoms needed to create the products, but each of these that is out there is going to accelerate AI, and then AI and energy is all going to, that initial chart that we had here. Let me get back to that. It's all connected, right?
When we're talking about the growth of AI and energy in the future, I can't speak to those because they haven't happened yet. And who knows if some company that we've never heard of is going to end up being the largest player in the world in 10 years. If you look at the early 2000s with the rise of Google, nobody saw it coming prior to maybe 98. And even those people in 98 were visionaries. And within years, it was one of the most successful companies in the world. AI could see some upheaval like that, where there's an upset in the expectation of who's going to dominate. But it's a huge field, and there's room for many players, and Tesla is uniquely positioned to capitalize on it. And I would say the same with energy. We don't know how big that market is going to eventually be. As every time the price of a megapack drops, the addressable market expands. Because right now it makes sense in a lot of places, but there's a lot more places where it's just not quite there yet. And there are utilities that are fighting it, but they're going to fall behind until they adopt it. And at some point, they're going to have to look at their peers and say, boy, everybody else is making money off this. Why are we the last ones not doing it? So there's uncertainty, but it's not a question of will these things be good or bad, but how good. And that's a fun argument to have.
Okay. So have you heard, I'm sure you did, Ray Kurzweil, theorist, and he wrote a book called The Singularities in year 2005. Now it's 20 years later. And what he was proposing then is actually happening on the time frame he's predicting in the future. And what he was saying was that people don't understand S-curves, number one. And people don't understand that when one S-curve and two S-curves and three S-curves, they're all happening around the same time, they do this. So if you're looking at the development of genomics, DNA, but then you realize that the compute power is going through an S curve. Well, that S curve is going to make your genomics S curve faster and steeper, faster, right? And in the same way.
Yes. Well, it's a convergence of tech. We see it with everything tech related over the last 150 years is they all build on each other.
Yep. Internet builds on compute power, builds on mobile phones. All of those three together helps you make labs and genomics and pharmaceuticals faster and quicker, everything. So in the same way, I see Tesla having all of these convergence. And I love this graph because actually AI is actually the base, So you're first creating electric vehicles and you figured out how to do that at scale, at speed. Now you're learning how to create autonomy, AI, but the two of them together, as we mentioned, they help each other accelerate more. And then now you've learned how to create batteries. And those batteries help power robots, and the AI powers robots, and the robots actually make you manufacture faster. AI makes you manufacture faster. It's all connected to one giant singularity that we're about to experience with Tesla.
Whether it looks like it or not, it is absolutely connected. Let's go back 150 years and say steam engine, railroads. Those are two very different things. Railroads for transportation, but those two things compounded each other and made a lot of things happen. Add to that modern agriculture, and then pretty soon you've got jazz hands, which hadn't even been invented yet. So all these things get on top of, they feed into, it creates a positive feedback loop where everything can change. Cities like New York couldn't exist without the invention of the elevator, and it couldn't really have existed without public transit like trains to move huge numbers of people around.
And a final comment on what an S curve is, right? It looks like an S curve. It starts off very, very slowly, and then once it hits a certain inflection point, it's adopted by the industry, by consumers, and then everybody buys it, eventually gets to 100%, and then everything starts slowing down as you get closer to, the laggards adopting it. Some S curves are going to go on for a long time because they're massive, massive markets. And the key point about an S curve is where you think you are. If you think you're at the beginning, then you got many years of flat, slow growth. But once you hit 5 to 10%, like when Netflix was still trying to compete with Blockbuster, and they were still selling DVDs. Once Netflix hit 5% of streaming, then that's when the Blockbuster just died, because eventually the 5% rises so quickly to 50% very quickly. Now, it doesn't take multiple years like it did to even get to the 5%, and that's where we're at with all of these new things right now. So. Awesome. Thank you.
Real quick, if you look at the adoption from vinyl to cassette tapes, it took decades. If you look at the adoption to CDs, it took a decade and a half. If you look at the adoption to DVDs, it took like 4 years. Yeah. And there used to be production cycles. Everybody had a new cell phone each year. There's a new cell phone every 5 minutes. There is no annual cycle. These S curves are moving faster and faster.
Awesome. We have multiple S curves in Tesla. This is what you need to understand as a Tesla investor, and you watch where we're at with each one of these segments. But the point is that every segment actually helps each segment. Thank you so much, Brian. That was great. Follow Brian on his YouTube channel, FutureAza. Thank you, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.